To the first corporate on the show, Gulf Oil Lubricants is in focus after the company renewed its partnership with Piaggio Vehicles till 2030 to deliver lubricants to the company's Piaggio's commercial vehicles. This partnership will cover lubricants including advanced BS6 oils and EV fluids. To discuss this, we have with us Ravi Chawla, Managing Director and CEO of the company. Mr. Chawla, thank you very much for joining in. So first, how is this renewed agreement with Piaggio different compared to what you had in the past? So as we were saying, I think EV fluids are added. What else, and what would be the incremental revenues?
Well, you see, we have been having a relationship with Piaggio for, in the past also. So the renewal is obviously up to 2030. They have a full range of commercial vehicles, as we know. We've also been supplying them EV fluids for their three-wheelers, which are electric three-wheelers. And what we have now is obviously grow with them as they grow in the market in various segments. And it is obviously an area where we are going to supply a complete range of lubricants across all their channels. So it is a continued partnership, and we're happy to share that we have renewed it up to 2030. As our strategy has been to work with the OEMs, we have over 40 OEMs in automotive, industrial, construction, EV fluids, and AdBlue. So this is part of the strategy, and I think this renewal, of course, Piaggio being one of our top 5 customers. So the incremental will be the growth that Piaggio gets, and of course, how we can penetrate the market. So in line with our 2 to 3x market growth rate, I think this is another, I would say, area where we can continue doing that.
So, Mr. Chawla, how much of your revenues right now is coming in from Piaggio, and would that continue to be the number as well going forward? Now that you're saying Piaggio is growing, the market is growing, what kind of incremental revenues would you see on the existing number?
So you see, Piaggio has been a partner with us for the last 5-6 years, and this is a renewal. So as they grow, we grow with them. So OEMs for us, obviously, we have certain OEMs where we have a relationship across their channels. Some we have in various, like the franchisee workshop or aftermarket. So OEMs do make up, more than 20% of our business. In fact, some segments higher. So I think this is part of that. And as we see the vehicle penetration go up, and of course, the EV vehicles go up for Piaggio, we will continue to grow. So usually our target has been 2 to 3x the industry growth. Similarly, in this area, if industry of commercial vehicle oils is growing, and overall growth is 3 to 4%, we expect to grow at 2 times that at least.
Is Piaggio one of your top 10 clients? How much did it contribute in terms of revenues? What was it growing at? Just want to understand the significance. And just to understand, so it's just purely an extension. It's the same things that you were supplying to them. It's just now extended for an additional 5 years till 2030.
You see, with the OEMs, it is a long-term relationship because we do a lot of product development, and then it goes into a contracted 3 to 4 years, 5 years contracts. So yes, it is part of the earlier, but I would say that as we look at India growing, definitely three-wheelers transportation, last mile transportation is higher. So as I told you, total OEMs for us is about 20% plus, in some cases, some segments even higher. So we continue to be the leader in the franchisee workshop in the private sector. So I would say that, we don't, the exact figures, the growth that we have got with Piaggio has again been positive. I would say it's been positive the last many years. COVID, of course, we saw a bit of, lull at that time. So we continue to try to grow at least, as I said, 2 to 3x the market growth rate, which is currently 3 to 4%, even for our OEMs.
Got it. So let's talk about quarter 3 now, because quarter 2 did see a lot of impact of elections. We did see, some slowdown in terms of volume growth, which has been strong so far, of course. What does the quarter 3 look like so far? You saw double-digit growth in PCO, DEO. There was good performance in B2B as well. Can you give us a sense of whether quarter 3 or the second half will be better than the first half?
Usually the second half is better than the first half. You're right, because H2 is October, November, December, and then you have the closing in Jan, Feb, March, where a lot of push happens. But if you take consumption point of view, the monsoons, which is July, August, September, is generally a low quarter. But this time with the elections, we saw that there were, and the festivals coming together, we did see a slight challenge in quarter 2. I think now H2 is certainly going to be better for the industry in terms of overall demand. For Gulf, we are focused on our segments. So most of our segments, we are clocking in good, high single digit, close to double digit, as we mentioned. But obviously one segment, which is factory fill, where we supply majorly to the commercial vehicles, that is about 7-8% of our business. And that is down 15-20%. So that, I hope it picks up in H2. So I think all the feedback we are getting from the market is that, yes, things will look better in H2. And definitely November, December, we hope that we'll see a sort of increase in terms of demand. And in our strategy, we have been growing well. And I think what we shared also on Q2, a lot of our segments have done well, except factory fill, which I mentioned is slightly down. But even that is expected to pick up going forward.
Tell us if this is a fair assessment. So some in the market believe that the company, despite growing much faster, 2x of the industry, 2 to 3x, your core volume growth will still be in high single digits, say from FY24 to FY27, 8-9%. Is that a fair assessment? And you'd spoken about margins of 12 to 14%. What about over the longer term, say in the next 3 or 4 years? Is there scope for you to expand margins given the premiumization efforts, dedicated marketing initiatives, cost management? Can we push up margins over the medium term?
Yeah, absolutely. I think, margin is, we have said that this is the 12 to 14% band rightly by you. And we are focusing a lot on our premium products. So the focus internally is to try to double the growth rate for premium products, which we also mentioned in Q2. So the focus is there. But you see, the segments that we are in today, we are growing in all the segments we are. So obviously, we will not say no to growth. The volume growth, definitely, if you take our 15 years average is also about 9% where the industry has gone. And recently, last 2 years, the growth has been double digit in volume for lubricants. So I think we would like to go to definitely that 2 to 3x. And many segments, we have less than 5% market share, passenger car, motor oils, industrials, tractor, scooter. So we see in the infrastructure segment. So we see that we can, in fact, grow a bit faster. So our endeavor is to do that, but definitely to give a commitment on margin and what is going to be, there is competitive pricing, there is raw material inputs, and some of the things do have a lag time in terms of the B2B segments also. So our endeavor and our objective has always been try to go to the next band. And I think with if things work well across the input cost, premiumization, and of course, competitive pricing, we should be able to see our band improve.
Okay, all right. So you are adding a lot new products as well. The EV value chain is something that you're focusing on. We'd like to discuss more on that, but today we are completely out of time, Mr. Chawla. So that discussion for some other time. So thank you so much for joining in today and giving us all those details. Okay, well, that's the word coming in from Gulf Oil Lubricants. With that, we'll slip into a short break. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.